in the crypto world today as a first ever Bitcoin ETF.
Bitcoin ETF.
Bitcoin ETF.
Bitcoin ETF will be approved.
If approved, this ETF would allow easy access for investors to get exposure to crypto.
That this would, unlock the gates, that you would see prices moving substantially.
So recently, there's been a lot of chatter in the crypto sphere around Bitcoin ETFs. Institutions are seeking to file and get their ETFs approved by the final boss of the SEC, Sir Gary Gensler. And they're saying that if approved, it's going to be a game changer and it's going to shape the whole crypto industry forever. But what is it and why is it so revolutionary? Well, that's a great question. So a Bitcoin ETF or Bitcoin Exchange Traded Fund is a financial product that lets you invest in Bitcoin without actually having to buy and store the cryptocurrency yourself. It's like buying shares of a regular ETF, but instead of holding stocks or bonds, it holds Bitcoin. So this empowers people with a convenient and regulated way to invest in Bitcoin without the need for technical knowledge or resources to securely store it. See, that's the thing. The Bitcoin ETF allows investors to invest into Bitcoin without having the need to hold it themselves. So this kind of defeats the purpose why Bitcoin was created in the first place. When the economy was in freefall back in 2008 because banks and regulators have massively mismanaged the financial system.
Let's talk about the speed with which we are watching this market deteriorate. We're down over 16%, down 21%.
Because we're now down 43%.
Satoshi Nakamoto proposed this idea of Bitcoin, a peer-to-peer electronic cash system. He wrote, "The root problem to conventional currency is all the trust required to make it work." Bitcoin was the currency created so people could have full power and control of their assets. And with the Bitcoin ETF, big players could come in and monopolize the market since investors don't have direct ownership of their assets. Okay, so one of the biggest challenges Bitcoin faces is its accessibility. And when approved, the Bitcoin ETF is the answer to that central problem. Big institutional players like BlackRock, Grayscale, Fidelity all intend to set up Bitcoin ETFs, and with such big players in the space, it could definitely make a huge impact on its price. So what does that mean for crypto? Well, many investors still view buying Bitcoin or crypto for that matter as an intimidating and opaque process. Bitcoin ETFs makes it easier for mainstream investors to access the crypto market since Bitcoin ETFs works pretty much the same way as any other ETF. Investors buy shares of the ETF through whatever brokerage they buy stocks and can trade them the same way they trade shares of Tesla or Apple, which leads to the assumption that this new simplified entry point will lead to an influx of new buyers and bring wave to new capital in the market. Demand goes up, price goes up. But actually that's not exactly true. Buying Bitcoin isn't the same as it was in the past. Retail investors like you and me have already figured out a way to buy and invest in Bitcoin because it's very easy. There are so many options and exchanges to start investing, so there's not much of an argument to be made that there's all this retail money waiting on the sidelines that will come in when the approval of the ETF passes. There's also ongoing fees that come with ETFs. If you own Bitcoin outright, you don't have to pay any fees. But when owning an ETF, management fees eat into your profits and reduce your returns. So again, it's not a guarantee that new capital will come in just because the ETF gets approved. So basically, the ultimate question is, will the ETF be approved? And honestly, no one can really say for sure. But just like everything else around crypto, I encourage you to stay cautiously optimistic because just about anything can happen and the market can move in either direction. So during these times, DCA might be the best way to go to protect yourself from market volatility and unexpected events. And with that, thank you for watching and we'll see you in the next video. Take care.
Hey, you're not subscribed. Better go do it. And if you're already subscribed, love you. See you next video.